Hey, good morning. Business Growth Group. It's Saturday. It's our time for our Mastermind uh, Saturday gathering. So we glad to see you. Been doing this for quite a while. My name is Rob Mason, and I want to introduce you to our panelists. So Brandy, will you do the honors of introducing us to the panelists?
We have Miss Monica, and we have Mr. Andrew.
Okay.
Hello, hello.
And then we have their backgrounds.
And here we go. We have Miss Monica, who's under insurance and financial services. We have Mr. Andrew Cisneros, entrepreneur and real estate consultant, and Mr. Rob Mason, entrepreneur, business coach, and investor.
All right. Okay. So you have the team, you have the full team, and we're happy to be here. So when we first got going on this, so if you guys are new to this and you're just checking in with us, we're glad that you are. One of the things that we really wanted to make sure that we put this information out is because we're in a global pandemic, and then what Andrew can tell you is he came to one of the live sessions and actually set it off and crushed it, and I loved it back then. But we look at, since we were doing it that way, Andrew, we had a small crowd, but it was effective. But looking at where we are, we're at 400 plus people who are now getting the information. So online, if you pivot and change and allow things to happen, now we're helping more people and providing more information and content. So the Business Growth Group is set up to provide small business owners or operators or people who are getting ready to start a business, and then also for groups that are trying to grow. Maybe you're an employee and you just need to get some additional information. You've been stuck in the same position with the company for a long time and you don't see any movement. Well, maybe it's not about the company, maybe it's about you investing in you to hear something different, to do some self-evaluation, and to invest a little bit more time or into a skill-based situation. So that's what we're here for. We're here to provide information, have you ask questions, and we have a lot of engagement. So during the week, you'll see a lot of different posts. We ask you to just chime in if you have questions, you have thoughts. Feel free to put that information out there. It's critically important. You're looking for information and answers. The place to be is there. We also have our YouTube channel. So if you go on our page, go to the announcements, scroll down, and you'll find a link that goes to the YouTube channel. Find a lot of information there as well. So today, as we start off, we're going to talk about the long game, and we've been talking about this for maybe about 4 or 5 months now, and we want to explain it to you. So I'm going to start by getting it over to Andrew. And Andrew, why don't you tell them about the long game, and and then we'll go with Monica and add to it. But the long game, what do we mean by that?
Yeah, absolutely. I think, especially at a time like this where, man, February, March feels like last month. I wasn't expecting this to go this long, right? So this is part of the long game in itself. And I would say this, I think that when it comes to long game, a lot of the times people say long game, but mentally they're not in a long game mentality. They're still very short game. So long game for us really does mean what it says. It's the long game, right? So it's, hey, what are we doing 2 to 3 years from now? Not 6 to 12. Hey, what does the next 5 to 10 look like? Hey, how can this reset position us to where 10 years from now I'm retired instead of 10 years from now I'm in line at an employment agency? And don't get me wrong, there's nothing wrong with that, but I'm still trying to figure out, man, what could I have done different? I missed it, right? So the long game is just really what it means is reposition, reassess, realign yourself for the long term, that your 30s, your 40s, your 50s, and 60s, because I know everybody is in different seasons of their life, And I would say that for me, when I think of long game, I always say is the 40 and 50-year-old Andrew is praying to God that I get it together right now. And I carry that with me tight because it keeps me from making short-term decisions. So I would say long game for us and everybody who's here is for those that haven't repositioned, it's not too late. This probably isn't going to end anytime soon. This may roll into 2021. This may go into 2022. You know, this may be what life is for the next 5, 10, 15 years. Who knows?
Right.
But the reality is hey, can I feed my family? Can I put a roof over my head? Can I thrive? Can I scale my business by making sure I make the crucial decisions now and reposition for the long game?
Love it. Love it. Love it. I couldn't agree with you more. And I think you did a great job of that. There's a lot of times that like you said, people are making decisions on the fly, and it's always about today, man. It really isn't about today. Um, and if people look at a reset, now's the time. You know, we had a couple resets, and I think the first reset to me was when we had the downturn between the time when Bush finished and Obama came in, and I want to say 2006, 2007, around that time. That was to me was a big reset because all the years prior, for all the information and things that you've learned over that time, now you had a chance to start all over again with more knowledge. Now, you know, here's the second chance. But now
Right.
here, it's been like what, less than 10 years since then, you know, and actually what, no, it's been over 10 years, right? That's normally a cycle. So here we are again. We got another reset. But this one is critical, man. If you don't pivot, you're going to be lost. So let's get over to Monica. Monica, let's talk about the long game.
Okay, I'm off mute. Okay, so I have a favorite quote that I think pretty much will resonate with the long game. It's a Stephen Covey quote. It's called "Begin with the End in Mind." And so, how I want to formulate this is just 3 little points. When you think about the long game, you want to basically have a concrete vision of your future. You want to look at decades from now. So, not look at the present or the past, because the past you can't ever go back and change that. The present doesn't really do anything for you right now if you haven't put a plan in place. And then number 2, you want to plot out your financial future by laying out the plan. So people who like to look at it from a religious standpoint, Habakkuk, that chapter talks about creating the vision and making it plain, writing it down, and so forth. So you want to make sure that you're plotting out your financial future, laying the plan down clearly so that you can have an actionable plan and a path that you know you're going to be able to go on long term. And then lastly, you want to always reset, like you talked about, Rob. You want to assess how you're doing so that you can make sure that you're staying on track for that long game. And so those are like my 3 points. Begin with the end in mind, because if you begin by assessing how you're doing, you will get there and be able to stay on track.
Yeah, absolutely. I couldn't agree with you more. So I'm going to jump in and throw mine in. And to me, where we're talking about the long game is a combination of what you both are saying. When we look at 2020, and all of a sudden we got out of 2019, which for me was 2019 was a tough year. And man, I was going through a lot. And even though I was carrying that cross, I didn't really understand what I was going through at the time until I got to December 6th. I went to a Fantasia concert, and then Fantasia, of course, she does church, and she got to a point, and she says, well, everything that, God told me to tell you, whatever, as she does, whatever you're going through and whatever I'm going through, she said, it is necessary. And I was trying to figure that out for a long time, man. I was going through stuff, and it really was necessary. It was stuff because I was, hey, man, I'm canceling relationships with creditors. I'm doing this, I'm doing that. I'm finding, a little bit financial stress. I got to make big decisions for my business, whether I'm going to, does it make sense to have all these offices? Should I shut down some of these offices? you know, what is the long term of my business? And so I made some of those decisions that were going to be affecting the business over a long term, which affected my wallet. So shutting down businesses told me that, look, Rob, you're not in the real estate business, right? I'm in the educational services business. And so I'm a service provider, I'm not a landlord. So what I had to do is figure that out. And it's funny because as soon as I made my decision on some of these things, within 2 weeks after I closed one of my main offices, 2 weeks later, we're shutting down for COVID. And I was so glad because that landlord was such a dog. It's the point, some folks, hey, whenever you sign a lease, you make an arrangement, hey, you want to make sure you're in alignment. So that was good. They got their money, but man, these guys did nothing for me to make it comfortable there. So anyway, the long game, what we're talking about, as Andrew said, it's not for today, right? What you have to do is pivot. If you look at some of these businesses, they got shut down. Hey, some of these restaurants, hey, they pivoted. Hey, I'm going to take this parking lot space, or I'm going to block this area off. I'm going to put some patio covers up, and I'm going to put some misters out. I'm going to make this comfortable, clean, sanitary, so that I can have clients, come in, be out in the air, socially distanced, and they can still enjoy our food. You've seen other businesses. I go to a spin studio. These guys did the same thing. They put a whole fitness apparatus outside. So now they're not losing money, they're actually making money again. And so instead of having all their operations up, because some of them just won't work outside, but they have enough to be sustainable and make money. And so that's what we have to do. Business has to pivot. But the long game is, hey man, I got to get to the other side of this thing. And then for us, when it comes to investing, launching your business can grow inside a pandemic. We have to understand that. But you can't do things the same way that you always did. But as I always say, you got to get in the water and get to the other side. So Andrew, what are some things that you think that business has to do differently from when we were, hey, meeting with the clients, person to person? What are some of the tricks of the trade or things that you understood or have learned in a global pandemic?
Right. Well, first of all, for those of us who do not understand, business is adapt or die, literally. And if we're not adapting now, my goodness, it's going to be very difficult to adapt 12, 24 months from now, because everything will continue to evolve. And if we're still on a fax and paper and pen and everything wet signature, we're going to run into some issues, right? So I would say, for one, understand that mentality of adapt or die. And two is, don't be afraid to embrace discomfort, because realistically, there is no growth without discomfort. Yeah, we hear that all the time, but if you really take that into play, it's easier said than done. It's uncomfortable for someone who's used to a fax machine and paper and pen to get a $700 iPad and then buy a $300 pen that goes with it, make $1,000 investment so they can do digital signatures. That makes people afraid, right? Because you're like, whoa, what happened to 20 cents? And you're asking me to spend $1,000. I may not get that return on investment back for 12, 24 months, whatever it may be. So remember that it's supposed to be uncomfortable in the beginning, but like anything else, you put in the work and you compound it and you sell out to you go all in with you. Those aren't issues, right? We fall short, it's our fault at the end of the day. But right. I would say adapt or die mentality it's a necessity. Understand that nothing will never be the same. I do more business virtually than I ever could comprehend. Before I was like, there's just no way somebody would buy an insurance policy without seeing me, right? Without knowing what I look like when I pull up in the driveway. There's no way someone would buy a house from their apartment when they don't even know what the paint actually looks like. The coloring could be off. But it is done every single day, time and time again. And I say that to say is that never get logical and always understand is that we're never as good as we think we are, but we're never as bad as we think we are, but we never do know as much as we think we know. And that keeps us from growing, because it's always that, well, that doesn't make sense. I'm not going to do that, right? Or the other day, I did an investment. I lost 1,020% return because I said that doesn't make sense. So I pulled out of my 30% and I was good with it. And I watched everyone cash in 1,000% return 24 hours later, and I was so salty. But then I said that is a lesson of you don't know everything. So
Mhm.
leave it up to the people that's what they do, right? Adjust, adapt to it. So I say all that to say, at the end of the day, remove the logic from it. Understand there's tremendous amounts of discomfort, and of course, allow yourself to experience the growth, because once you experience it and you realize that there's something more to your business than what you've been experiencing, then your mind is going to change and your business will continue to evolve.
Wow. Wow. You just dropped the mic on that one. Yeah, that was awesome. So, man, I've taken that down. You know, never get logical, adapt or die. I love that. You know, embrace discomfort. I think those are really big things, because you know
Yeah.
you got going to be uncomfortable in this thing at first, particularly. And then one of the things that I've learned in the process is like Mondays suck for me working remotely. Mondays have always been like, I don't know why. I mean, I get to a certain point, I'll maybe get 4 or 5 hours in, and then my mind kind of travels, and I have to kind of pluck throughout the day. But the latter part of the week is more productive for me. But I didn't beat, you know, after a while, I just didn't beat myself up about it. I had to realize that was the new deal. Okay, let's go over to Monica. Monica, let's you know, let's hear about what you learned in you know, COVID and working remotely, and what skills and things that you had to pick up with trying to work with customers and dealing with remote learning and all that.
Okay, so for me, I have a team of about 20 some people, so I had to figure out a way to keep them motivated. After, oh, hold on.
So you had to keep them motivated. I just had something like that happen here too.
Yes, that because I'm double duty here with work and everything. So basically, I had to keep them motivated after the first 30 days of working from home, because they were very excited. It was something new. And then all of a sudden, the old habits started to come back of people not wanting to work, people saying that they were having issues with focus. So then they were getting doctor's notes to talk about their anxiety from being in a closed setting, four walls, not being able to go out. So had a lot of issues like that to go. So basically I'm down to 7 people. And so I decided that I cannot make things work for someone else if they don't want to make it work for themselves. So I can't want it more for them in terms of them coming in and reporting to work and being at their best production level. So I focused on the 7 that really wanted to be there. And we started winning as a team because it was like, we don't want to fail. I mean, we were the smallest team in the section because of, you know, things that happen for whatever reason, people not coming to work. But I learned how just it doesn't take a lot to make that productivity soar, because they decided to go above and beyond what was asked of them. So from a production level, that's been something that has been difficult in COVID with working with teams. Um, Concentrating on my own actions of being productive, because I was all over the place, not getting enough rest, not looking after my well being, getting up because I could see my station there. I wanted to just work all the time. And I didn't get a lot of sleep because I was like, oh, I'm going to get ahead. So I was constantly ahead, but at the detriment of me being very tired, that after about 90 days in, that productivity for me seemed to just kind of dissipate. So I had to learn from productivity from my folks, getting them motivated, keeping myself sane in my place in my space of not wanting to just constantly be ahead of the game. And then lastly, just staying focused. And some of the things that I've done to stay focused was actually listening to music while I'm actually doing task work. So I listen to a lot of jazz because that kind of helps soothe me and gets me in that productive mode, and then doing yoga. So getting up in the morning and doing some yoga, meditation, that kind of helps get me through the day where I'm not on edge. I'm not finding myself where I'm all over the place. I'm more focused and I structure my day, and I have a to-do list that I try to cross off. And if I don't finish that one to-do list, I go back to it the next day and add to it, as opposed to creating a new to-do list.
Okay. All right. Good. Very good. So one of the things that I've had to do working with crews, really just allow them to, take more ownership, make sure, but making sure that along with the ownership, we're able to check. So people do what the boss, checks. So a lot of times if we're not checking, things may not happen. The other part is we want to make sure that as we're leaning into business, we still have to tell people kind of what direction we're going in. I had watched people struggle in discomfort with another organization that I've been involved with, where management, I mean, the pace of change was starting to happen really quickly, and some of the decisions that management made were really starting to affect the workforce, because people didn't understand, okay, what is it that we're doing? Why do you want us to do this? And without a why, results can flourish, can dissipate. Stress levels go up, particularly in the pandemic. So kind of working with teams and working with different people, one of the things we have to remember as leaders is, as we make these decisions, particularly in COVID, we have to make sure that information along with a why. Why are we doing this? Here are the expected outcomes. Okay, if we do this, we believe that this will happen. And if we don't do that, a lot of times people really pick up stress levels. They don't understand. Hey, they're asking me to do this, they're constantly asking me to do this, they're asking me to do that, and they get stressed out. Drew, you want to comment anything on that?
Yeah, absolutely. I think that realistically, I think you hit the nail right on the head in regards to people losing track and understanding of the why in a time where they're so disconnected. Like realistically, our team is not connected to upper management. They're not connected to why we're making the decisions we're making. And it's up to us as leaders and those of us that are running organizations to remember that, because sometimes we disconnect so far from them because they don't have to worry about paying the bill. We do. So we make the decision not understanding the negative compounding effect that has. So I think that that's a very crucial that you said that, is that at the end of the day, if the team doesn't understand where we're going, most of the time they're not willing to follow you because they trust you enough to keep going day by day. But once there's that disconnection, there's no longer trust, there's no longer an understanding, there's no clarity. I always say with clarity comes speed. So there's no efficiency. So the team will begin to, like you said, they'll dissipate. The team will begin to one, become very sidetracked, and two, all of a sudden what their life matters more than what the cost of moving forward with you. So I think that's crucial from a leadership perspective, and from a standpoint of trying to scale in a time like this, is never forget is that we're only as good as a team, and we're only as strong as our weakest link. And if we're really trying to scale and we're really trying to change the world, we have to constantly stay connected with the executive assistant, the individual that opens the door, your greeter, right? The individual that transfers phone call, whatever it may be. We have to remember is that they're experiencing the same discomfort that we are, yet they don't have the responsibilities, but we signed up for that. That's our problem. That's not theirs. They don't deserve to feel that discomfort because they don't have to stay up till 2 in the morning trying to figure out what we're going to do. That's our problem, right? That's why the checks are different. That's why the different things are different in many different ways in different seasons, of course, but it comes with the territory. So I think that obviously keeping that in mind, I think that that's crucial, and we can lose sight of that, especially from the upper management leadership perspective, trying to scale and understand how you take somebody from point A to point B and get to the finish line with them.
Yeah. No, that was beautiful. Leadership matters. So people need to really understand that leadership really matters, in particular in these particular days. There's a lot of uncertainty. People want to know what's going on with their life, what's going on with their organization, clear, concise communication, and communication often at many levels, right? And then leadership at several levels of your organization is critically important. Because people are going to they're going to make decisions. Like I saw a high performer, one of the highest performers that was in the group. You know, all of a sudden, I hear on my teams comes a little ping, "Hey, you got time to talk?" You know, and there's frustration and at the highest levels. So we want to avoid that, because every organization is going to have performers, and some are going to perform at peak levels. Kind of like what Monica was saying. You know, she had her 7. It's just like, you know, you go to play pickup basketball, got my 5. Hey man, I'm rolling out of the car with my 5 already. All you scrubs over there, just stay there. You know, we got next, but I'm bringing my 5. Right, it's the same thing. I got my 7 right here because these guys are committed. But you know what? The other side is going to be different. So let's take it there real quick. What happens? You know, playing the long game. We're starting over here, and now we're in a pandemic. Now there's a big chasm in between this space. We are thinking from the federal government, we're hearing that this space, maybe 2021, early 2021, they're going to have the vaccine by the end of the year. Okay, well, guess what? Everybody's not going to run out and take it. It's probably going to take us to this time next year when we really start to see some type of improvement. And we don't even know what's going to happen then. But likewise, we're probably never going to see 100% of everybody running back into offices and things. So I think the world is going to be a different place. But crossing this chasm and getting to the long game really means that, again, we've always talked about June and July of next year, making sure that, hey, when I land next year, this time June or July of next year, which really isn't that far away, right? It's about 10 months away, right? We're in August, June, July. June is 10 months away. So what are the things I need to do to be financially fit here next year at June? I need to make sure that if I've invested in the market and I've taken advantage of a market that is a hell of a bull market that is continuing to run in spite of what's going on in the economy. You know, we're putting information out there, but we need to think about that. What are some of the things, and what are some of the potential casualties of not being prepared or not jumping in this particular water? You got to get across this chasm. How are we going to get across? Make sure that we have financial legs, strong financial legs. If we're a new business owner, or if we're a mid-term business owner, long-term business owner, I think one thing we had to really understand by now is cash is king, making sure that we have good capital resources. If you think about it, no one thought that this would ever happen, right? Schools never thought it, barbers never thought it, no one ever thought that these things something like this would ever happen. So dentists, greatly impacted. There's just so many people. So what are some of the contributing factors? And I'm going to come, and what are some of the things that could harm you more if you don't do? And I want to take this into a different place first. So I'm going to come to you, Drew, real quick from a financial services standpoint. You know, what are some of the things from financial services that you found that clients needed to be prepared to do or to consider in this particular market so that they can land successfully next year and years beyond? Are there any particular things in your your industry?
And I'll touch it from two different sides. I'll go all across the park on this one. So on the financial service side, from the insurance perspective, man, there was so many people who got hit with the fact that they didn't make a decision sooner. And I know that it's so cliche when you hear it all the time. Hey, look at the cheapest anything is going to be is today. Well, duh, right?
Mhm.
But a lot of people have the mindset that someone's always trying to get something out of them, and we forget to understand that people are professionals for a reason. And we're sitting down having a conversation with them because we have concerns. So if we're concerned enough to have the conversation, we should really be concerned enough to listen to the evaluation. And we should really be concerned enough to really understand that if I'm in front of them and they took time out of their day to be in front of me, they probably have my best interests, right? And what I've seen is a lot of people where they were underinsured, right? Their assets, their portfolios, that who they were, there wasn't enough insurance to cover them. Their estate planning, their taxes, their different things. And now when you're coming to a point where, oh, it's a pandemic, wait, hold on. It took them 20 years to build their 5, 10, $15 million net worth, but it was gone like that.
Wow.
But because the restaurants had to shut down, because the tenants stopped paying rent. So what do you do when your portfolios are defaulting? Well, if you would have had insurance when you were in your early 30s, when you built that portfolio, instead of trying to do it in your 50s and 60s, it would have cost you $1,000 a month, not 10. Right? So the
Yeah.
biggest I've seen now is that understanding, especially for those that are younger, please do understand is that if you don't get your ducks in a row in your 20s, you will regret it in your 40s and 50s because that's when you really need it. And yes, let's understand money makes the world go round. Yes, you will be putting a lot of money into your first 10, 15, 20 years when you don't need it, but it's just like anything. We pay car insurance for 40 years and we only crash once, but it's the importance of having it when it's needed. So it's just getting into the understanding of that long game mindset. Everything comes again to long game, right? So I would say that would be the biggest regret that I've seen my clients make is not react sooner and not reposition themselves and their family the way they should when they bust their butt to build that legacy, and because it can all crumble like that.
Wow.
And understanding the importance of that. That would be the financial service side, the asset protection side of it, right? Now going over to the real estate world, one of the biggest things that I've seen right now is that those that went through 2008, right? They're
Mhm.
seeing right now and they're smiling, right? My dad is in heaven right now because he's like repositioning like crazy. He's like, if I could have did this in 08, like 08 would never happen to me. I said, well, it happened to you. So let's make sure that it doesn't happen again,
Right.
right?
Right. Right.
And those that really have experience, and this is to the younger generations again, you've never experienced a recession. You don't know what it's like to foreclose on your homes. You don't know what it's like to have your investment properties gone. You don't know what it's like, but do understand that it will happen if you don't take care of it and take advantage of times like these, because these are the times where, hey, I've seen interest rates on 15-year mortgages at 1.9, 1.8, 1.7. I'm like, what in the world is going on? But
Yeah.
those that have been through the cycles of life, they're like, hey, sign me up all day. Sign me up all day. I'll go from a $3,000 a month mortgage to a $6,000 a month mortgage because I know what it's like to need to have to put something into something so that I can have something for my family, etc. So I would say again, understand there's two sides to it. There's the regretful and there's those that have learned their lessons and understood, hey, professionals, you tell me what to do and let's roll. So I would say those two areas right now are crucial.
Okay. No, I agree with you, and I remember that pain. I remember having multiple houses, multiple cars and boats and everything, and I'm standing in line in Vegas, waiting to get. I'm wrapped around the building. I'm probably number 2,900 in line, hoping to get in to get a refinance. Finally, after about 4 or 5 hours, I get into the room and they tell everybody who has more than one mortgage to stand up. and said, sorry, but you guys are going to have to exit. This isn't for you. You have toxic assets. We're trying to save people's homes that only have one mortgage, one car. This is it, But everybody else, have a good day. Good luck to you. And hey, man, having to fight like a dog. But yeah, that's the thing we have to do. Let me come over to Monica. Monica, I'm going to take it into a slightly different direction. Let's into investing into the with your investment portfolio. And we always been talking about stocks and other things. And what are some of the decisions that you made? Then we'll transition from there and go into some of the picks that we've made and put into out into the system so people can go on our page and get them. And then let's get a quick report on how those things are doing. So let's go ahead and get you started on that.
Okay. So for me, it's been about perseverance.
Right.
So I started this journey back on December 31st, 2019. I always say that on New Year's Eve, which most people would be celebrating, going to the club or going to church, whatever they have as a tradition. But I decided, my mom used to have an old saying that you would put $1 in all of the window sills as the new year is coming in. So that way you'll have money coming in throughout the entire year. I said, okay, I'm not going to put money in the windowsills. However, I am going to invest in my future. And it was just in my spirit because my dad, his voice just kept saying to me, hey, remember when we used to sit back and you were 3 and 4 years old, we would look at the Wall Street Journal and we would look at all the different ways to build a portfolio of stock that he would look at aggressive and he would look at moderately aggressive, and then some of the ones that were like the penny stocks, because he said sometimes those can be left on the table and those end up being the ones that pay out the most because, like anything, the long game, so they sustain the time, so that perseverance there. After that, I've been executing different plans to make sure that I add to my portfolio. So I've added, I basically have had a big interest in the pharmaceutical stock because of being in COVID. And then I've also had a fascination with the airlines and the cruise lines because, like with anything, what goes down must come back up. So they are gradually doing that. When you look at some of the picks that we have as the BGG picks, you'll see that they're consistently creeping up. They do have a tendency to do like a little roller coaster thing. And I would encourage people not to be fearful of that roller coaster piece that happens with the stocks because it's about playing it for the long game. If you're looking to try to get rich quick, like some of the people did when they purchased Kodak, keep in mind that they had shares of Kodak. They were probably playing the long game too. And then it hit and that the payoff was good. And then they knew when to get out. So they knew when to fold and say, okay, it's probably going to get where it is to peak out. And so I'm going to go ahead and cash out before the bottom drops out like it's doing right now. But again, what goes down will come up. I have remained flexible in my stock picks as well. I only sold off maybe about 300 shares to purchase some Apple stock because for those of you guys who don't know, Apple will be splitting. I think they have a 4-to-1 split. Correct me if I'm right or wrong, Rob, but they have a 4-to-1 split, and that's going to happen on August 28th. So I felt that that was a great time to get in and invest in Apple stock. Very expensive, but again, I took one of my stock that has been doing really well and decided to diversify some of those funds into Apple. And that's probably going to be my plan moving forward in 2021 as we continue to play the long game. So real quick, we always like to let you know how our stocks are doing, the BGG picks. So we had 3 stocks that actually increased from August 8th when we presented the stocks to you before then at the last Mastermind meeting, and that is Halliburton. That has been one of the stocks that has sustained since we selected that as our BGG pick on March 23rd. So it has consistently throughout COVID increased. So it went from 1489 on August 8th to 1574. That's what it closed at on August 21st, yesterday. Denny's is another stock that on March 23rd, we picked it at $5.91. It has consistently had a gain, and now it's trading at $10.63. So, and let me just go back to Halliburton. Halliburton on March 23rd, it was trading at $5.24. So you can see how the growth has been consistent throughout the long game of COVID for the last 6 months. So the other stock actually had an increase. One of the airline stocks was Delta, and Delta increased 2 weeks ago from 25.96 to 27.18, and then it had a little incremental increase from 27.18 to 27.27. So again, Delta is one of those airlines to watch. It's definitely coming back, and it's probably because of all the practicing of social distancing that they're doing, unlike some of the other airlines. The other airlines, they're packing them in. But Delta still has reserved the right to have the middle seat open and practice as much social distancing as they possibly can.
Oh, good.
So that's what I have for you today.
Okay, very good. So again, on well, you know, some of the rationale for us when we started in March is the idea is if you, and we had a lot of young investors and people that are just starting in this market. We've seen a lot of people that downloaded the Robinhood app and are really just trying to get into the game. But again, what we recommend is you got to pick it. And I love picking stocks that were like $5. You know, hey man, I can spend, you know, I can spend $100 and get 20 shares of something if it's $5. And that was kind of my mantra. I'm gonna load up on cheap stuff. Monica turned me on to VXRT. I think that was like $1 something when she first turned me on to it. And I don't know if I bought it for $1.60. I can't remember. She bought it a lot lower than I did. I jumped in, and now the stock is what, $10, $11, and they're expecting it to get to the 20s. And so when you have you got a chance to buy low, right? Buy low and grow. That's where we want to be. I'll give you an example about playing the long game. About 4 years ago, my foundation, we invested $1,500 into to start our endowment because we want to grow money into perpetuity, which means money that's going to continue to grow and grow and grow beyond the times when we're here on Earth. So there's always money that can be awarded for scholarships and other things. So we took $1,500. We said, hey, there's no reason for this to be just sitting in the bank. Let's take $1,500, and we bought Facebook. And you know, our broker was giving us a little pushback. Well, maybe we should do Apple. No, I said, let's do Facebook. You know, we'll come back and we'll get Apple on the next go round. Well, we did. And we got Apple. And I mean, we got Facebook. And for $1,500, that same $1,500 now, 4 years later, is well over $5,000 in value. Those same shares. Okay, so it went, so $1,500 in the long game became over $5,000 just by doing nothing besides going to work every day and whatever else. We haven't done anything. And so the premise of the long game is we want our money to work just as hard, if not harder, than we do when we go to work. Your money has to work for you. So over a long haul, you can buy things that will rise up and grow. So, hey man, I need hey, I want to get a new car. I want to get this and that and the other. Well, guess what? My money's been working. I can sell some of this along with some of the cash assets that I have, put it together. Now I can pay for a car or pay for 90% of a car. So if I have to finance something, maybe maybe my payment is only $200 a month, $250 for 24 months, and my car is paid off. So I'm coming into it, and now it's not just a big depreciating asset because I already own most of it. Okay, so then I don't have to buy all this gap insurance and this and that and the other. But those are some of the things we need to think about. But on that, 2 quick questions, and then we're going to go into Q&A. Drew, I'm coming back to you. When it comes to cash and monthly cash, for most mid-income families, let's say a family of 4, and then say a single person, in a budget, what would you look at person trying to put into a cash savings plan, and then how much for and I know this is there's a lot of mixed variables in this,
Yeah.
and then also for investment, and then give me what you think for business and some of the rationale, because a lot of times for businesses, we have cash, but there is a side that a lot of people don't take advantage of is, hey, put some money into the market so you can have, a long-term, view of things. And we even saw places like J.C. Penney and stuff, how they got started years and years ago. They bought insurance policies, and they bought like whole life policies. And so at point, if they ever got into trouble, they cashed an insurance policy, and that paid for a lot of stuff.
Right.
Go ahead.
I think to answer your question, 2 different worlds when it comes to your everyday family versus your everyday family that is maybe more of a self-employed or a business owner. For the simple reason being that anybody who is on a salary or an hourly wage or an employee in a sense, it's a little bit different to have that conversation as a self-employed business owner conversation for the simple fact of this: income is capped, right? If you're at your $20 an hour, it's $20 an hour until you get your raise, etc. Whereas the business owner, their $20 an hour can increase to $50 an hour in 6 to 12 months, right? Or they just close one more deal a year and they increase their income by $500 a month. So I always say this to start: when it's a more of a middle income, maybe mom and dad, they're on a salary, they're on a W-2, etc. I always say when it comes down to paying yourself, it's always good to put 10 to 15% of your money away just for investment purposes, right? So I always do my 10 to 15% for my savings, 10 to 15% for investments, money that can be loosed. It's not needed at all. Your savings, it's there for when you really need it in case of an emergency, etc. So I always say 10 to 15% of your money, if you can put that into something, whether it's an insurance policy, whether it's a mutual fund, whether it's an IRA, whatever it may be, it's putting it into something that is going to appreciate versus just sit there and kind of just tempt you to spend it, right? I always say if you can put it somewhere where you don't even know where it is, great. Because realistically, anything that's in a hand's reach, we're going to touch it and we're going to dip in and say, well, I can pay myself back later. And then it's going to come down to the 50-year-old self. You're like, well, I should have had 30,000 here and I have 5. What happened? Right?
Yeah.
So that's a conversation I take. I always encourage people 10 to 15%. For some, that's a lot. For others, it's doable. 10% obviously it's not going to make you go bankrupt, right? You make 10,000 a month, you're taking 1,000 out. You make 5,000 a month, you're taking 500, etc. But it's an addition. It teaches you to be disciplined. For those that are business owners, self-employed, completely different conversation. I would encourage you guys to live off of 30% of your income. your entire life, expenses, your cars, your homes, your rents, whatever it is, your groceries. I do my best to do that 30% so that I can be liquid and I can position myself to really, really thrive in a time where it's necessary, and I pay myself and I pay my business, etc. So I encourage you guys, those that are self-employed or business owners, first of all, speak to a CPA, get yourself an S corp, whatever corporation makes sense for you, so that you can pass through, pay your family, and get the wealth you deserve. And then also, if you can get all of your life off of 30%, let's just say you make 100,000 a year, that means your bills all in total are 30 grand. I mean, you have a lot of money to play with. You're talking 70,000 in excess for that year that you can really put into something. In 5-10 years from now, you can really make that do something for you. So I always say, when it comes to that, 10-15% for the self-employed, challenge yourself. And I know that's a challenge, because when you see as a business owner, sometimes we get cut checks, 1,000, 550, 100, 200,000, and right away, just, whoo, where am I going, right? The first thing you pop on is you go on Google and you pop on Ferragamo, and it's game over, right? So I always encourage yourselves, if you can live off 30%, take it, do it, build that discipline, and you'll be surprised your life and your businesses will change. Absolutely.
I mean, I love that. That's music to my ears. I've been doing some things for a long time, but when we start to do those things, it's funny because your life is a business, and when you're a business owner, it's so funny, man. Especially if you have multiple businesses. Hey, man, I got multiple debit cards, and if these businesses are doing well, hey, man, I'm going to the gas station. I'm not using my personal money, right? I'm using my business debit, because I'm going to be doing business today, with my company, right? So I'm gonna fill my car up with this. Oh, I'm going to eat. That's meals and entertainment. Oh, I'm going to play golf. That's meals and entertainment, right? Because I'm going to be playing golf with someone, and we will be talking business, right? This meals and entertainment. Oh, I need new tires. That's my vehicle, right? I got a colleague of mine in his business. Him and his wife, what they do in their bylaws, what they put in was that if they work 8 hours, if they work at least 8 hours a day, that they're able to get $50 in per diem per day. So as a husband and a wife, they're basically tax-free $500 a week, per person. So they're able to take, $50. So it's $100 a day, which is basically $500 a week. They're getting $2,000 tax-free that they're able to get from their corporation, because they put it in their bylaws. So, but for you and I and everybody else who goes to work for somebody else, hey, you can't do that. If you didn't travel, this and that, you're not in control of your bylaws. Very interesting. Monica, coming to you, what would you say for the same question? Minimal cash, minimal investment for a person or business. What are your thoughts?
I'm pretty much in line with what Drew said about the 10%. And then, so 10% upfront, and then I have like recurring amounts that go in, so I never see them.
Okay. All right.
So, and that's 10% every 2 weeks.
Yeah, for those of you guys who don't know Monica is the acorn goddess. She knows how to push those acorns under the mattress or wherever she's got to put them, and then she'll get them when she. So anyway, she.
I have some of everything, and it's funny you should say acorn, because I have the app that says acorn, and it's actually saving like for retirement stuff. And so it's like one of the probably least aggressive apps that I have that makes money for me. So I had, before COVID, I had situations where I would set up certain things how I shopped. Right. And so it would pull money, and I said, oh my God, I forgot I shouldn't have bought those shoes today, because now money pulled out. And then I have this thing with Dairy Queen. I love the little, whatever you call them, the ice cream chocolate dippers or whatever. It will pull money from that. So I did that to try to be disciplined, but I ended up saving more money because I wasn't disciplined with my eating habits or my shopping habits.
Okay.
So, and I don't ever touch that money. So once it goes in there and it pulls out, that's it. And so I just like to see it accumulate. Because I shared a story with Rob about how my ex-husband used to always say I had this mentality of saving like a little old lady. He said, you just always want to be stashing coins away. But every time I would save up the coins, he would say, hey, what's in your stash? I'm gonna need all of that. I'm like, really? He said, well, I mean, you saved the money. And I'm like, oh, my goodness. So don't think that anything is too small to save. If you cannot save 10%, start out with maybe a number of saying, I'm going to try to save $100 a month.
Mm-hmm.
And the objective is never to touch it. Act like that's no money.
Yeah.
And then when you can get up to that point where you save that 10%, then do that. And another thing I like to do, my financial advisor told me this about 30 years ago. He said at the end of the year, he said, pay yourself 1% of your salary towards your 401k retirement. So I do that. And I've never had a hard time being able to do that each year. And also, he said, if you can, he said, invest in mutual funds so that you can diversify, not just having the stock, because mutual funds are pretty steady growth. And so I have listened to him. It has worked. The 1% saving that, like I said, I've never had any issues. And then one time, I think it was 5 years straight, I decided to live off of my salary from 2000 to 2005. So every year that I got an increase in my salary, I pretended like I was at the salary of the year 2000. And that was pretty cool. So I saved a lot of money because I had a goal in mind to save for my kids' college fund. And so that way it wouldn't be such a hardship because I knew school was going to be really expensive. And we had all the school funds for them. They ended up getting scholarships, but still that was money that they were able to do other things like books and have their own space in terms of apartments. So it really works out, and you start to see the savings and you see your money grow, and it makes you very excited. So the objective is don't touch it.
Okay. All right. So let's good job, everybody. Let's go to Brandy. Brandy, we have any questions in the chat?
Yes, there is currently. And if I can get all three of your opinions on this one, I think it's a very good one. This person, and it's a little lengthy, but it says, how do you successfully balance being an entrepreneur while maintaining a healthy family relationship? As I start this new venture, I don't want to become one of those entrepreneurs who work 24/7 and don't want or can't make time for a break or family time. Is it possible to be an entrepreneur without having to neglect your family? Reason being, I'm getting married next year, and I don't want to end up like fellow family and friends who got a divorce simply because their spouse don't know their spouse don't know how or want to take a break from being an entrepreneur. Is it hard to choose family time over money?
Well, I got a lot to say here, and Drew, I know you're down at it. Monica, I don't know. Let's go ahead, Drew, and I'll come in.
I don't even know. I'm probably like the worst person to possibly answer this question. Okay. Will there ever be balance? I don't think so. I think you can control the chaos to an extent, and yeah, to an extent. And I would say this in the beginning. I think that once you truly have your business where you want it to be, then you can pull back and really begin to say, hey, I'm gonna go take my, I don't know, my every Saturday and Sunday, and I'm gonna spend it with my family and turn off my phone. I would say that once you get it to that point, but in the beginning, I know that it's probably, I don't know, I'd just be transparent. It may be discouraging for some, but I don't think there's any balance in the beginning. Because in the beginning, you're just trying to figure out how to survive and maintain a lifestyle with your family and put food on the table and scale your business and keep yourself above the water until you get to the point where all that hard work and the relationships and the resources and the business compounds, where it was very difficult to make $50,000 a year in your first, I don't know, 1 to 2 years, depending on your business. It's very difficult not to make 50,000 a month on year 5, right?
Mhm.
And you'll catch that because a lot of the times we're so focused on, hey, I feel really bad. And don't get me wrong, I have 2 daughters and I have a wife and I have a family, but the first 3 years of my daughter's life, I made a lot of sacrifices, where I always made sure that I went home every single night and I went to bed with my family. That was a given unless I was traveling for business. And I never compromised that. I always went home. I know a lot of people, they find a way to figure it out, sleep at that. That was my non-negotiable. I'm going home. I need to know that my wife goes to sleep next to me at least at some point tonight, right? Whether it was 2 or 3 in the morning, I made sure that I stuck to that non-negotiable and I went home and I made it happen. And whether I had to be up 3 hours later or not, whatever. But that was my non-negotiable. And I would say that I encourage anyone who's in the beginning phase of their business, create non-negotiables that you're not willing to compromise. And then through that, you'll find some type of balance because you won't feel bad because you know that that's your non-negotiable and there's no money or no price or no deal that's going to change that. And I think that non-negotiables for me helped me survive my first 2 to 3 years of business. And I'm on right now, I started business very young. I'm on year 8 right now, year 9. I can sit back now and finally spend time with my daughters and finally feel guilt-free and step away and travel and do those things. But it took me some time to get to that point. So I can tell you is that in the beginning, it may be overwhelming, but I promise you, if you stick to it and you drive, there's going to be a day where whatever your family needs, you'll be able to provide. And you're gonna be put up with those situations where mom and dad might want to move one day, and it's gonna take a 20, 30,000 down payment. And I promise you, you will write the check. You will
Yep.
write it if you put in the work for it. So I say all that puts it into perspective of in the beginning it's chaos, but at some point you get to control your life.
Oh, beautiful, beautiful. I like that. Mine is going to be a little different. So let's go to Monica.
Well, for me, my entrepreneurship has been mostly with my daughter. So I would say balancing that with family time, we get too much family time because I'm back and forth with her business. She's setting up meetings with me. She called me while I was on the webinar, which she knows that I'm on the webinar every 2 weeks. And she's like, hey, she said, I'm in New York. I got this business venture that I want to talk to you about. I said, we're going to have to wait in an hour. She said, oh, so we got to make an appointment for 5 o'clock. I said, yeah. So it's like too much. And sometimes it's overwhelming because I'm very hands-on and she's very hands-on. So sometimes it's overload because when we go out to dinner, even pre-COVID, it was like we were always talking business. And so she's very, very organized with her business accounts and things like that. And so she would take the tab and pay it. But then she said, okay, where's your half? And I'm like, wait a minute, I thought this was a business venture for you. But it's like, oh my goodness, it's just not fair. And then I have my regular job. So it's just, that's where the part comes in where it's difficult sometimes to have a social life outside of the family life because we like to hang out with my sorority sisters and things like that. It gets difficult because I'm doing 2 jobs. I'm the entrepreneur with the marketing piece with my daughter and making sure that everything is set up for her, and then making sure that the 9 to 5, which is what brings in the cash flow consistently, is taken care of as well. So luckily I don't have a husband, a boyfriend, or anything like that. So I don't really have to worry about having to spend that extra time with someone having their mouth poked out about what I do. So I'm independent and it works for me now. The only person that I have to really answer to from a family standpoint is my daughter. And she can be very demanding at times, but we work through it. We make sure we have that flexibility.
Beautiful, beautiful. Well, I'm gonna take it somewhere, and I'll be brief with this. I think it's important really to choose the right mate. Okay. A lot of times, if you choose the wrong mate, that hey, they want all the attention and all the time, and really, if you're gonna build a business, uh, you gotta. It's just like a plane getting to the end of the runway. If when you start that business, if you do not put 100% energy into getting that business off the ground. It's just like a plane on the runway. Those engines have to be on full. But once you get above 10,000 feet, 20,000 feet, guess what? That resistance is easy now. Now I'm cruising along. So it kind of like what Andrew said, I got to get up there. I'm going to make those sacrifices. It's going to be hard, but once I get there. But man, you talk about drama. And if you get the wrong relationship where someone is used to, hey, I'm just going to work a regular job and being home, and trust me, I have a friend who's is a salesperson and also an entrepreneur, and she's in a relationship with a guy who works like a 9 to 5, and he wants, hey, he expects this and this and that and the other, and it's a little tough for her because she is dealing with clients and other stuff. And so I think choose right. Magic Johnson, he does business. He's got the right partner. His wife understands he's a businessman. Before that, he was a basketball player. She understands that how he's built. They have a relationship that works for them. You got to make sure you choose right. So so your partner understands that this is what allows us to do a lot of these things, and this is part of my DNA. Maybe your DNA is different. We'll be there to support each other, but then you set up non-negotiables, and you work through that. The other part is take a retreat. If you're a business owner, take a retreat. Bring your family or your spouse, and then you set up that time. Hey man, we're going to pay for this. We're going to this nice place. But while we go to this nice place, I got to have time to do official business, whether it's 2 hours, a day, 3 hours, whatever it is, so I can do my planning, get away. But hey, we're going to spend time and maybe go to the spa and do other things. And these are complete good write-offs because it is a retreat, and that way you can spend time. But set up the non-negotiables. Go ahead, Brandy.
She actually asked a follow-up question. That Andrew, you mentioned deal breakers. Would you guys feel comfortable sharing one or two of your deal breakers when it comes to taking off your entrepreneurial hat, so I can get an idea of what's realistic and what's not?
Drew.
I opened up a can of worms, huh? um, I'll give you one example. There's probably an extreme non-negotiable, but I said this once. It's favorable for both of us. So one of my non-negotiables with my wife is anything that she wants to do, I can't say no. Because everything that I need to do for the business, she allows me to get it done. So if that means paint the house pink, my God, the house is going to get painted pink. Because what I needed to do to get business done, to be able to come home and provide for my family and create that legacy, that freedom, that peace of mind, that support, that structure, knowing that I have my wife's 100% best interest in knowing that she has my back in every decision I make, and there is no ill feelings toward her or why, I let it be. So that's my non-negotiable, is just I know that there's going to be decisions I have to make. Please allow me to make them, and I promise you I will allow you to make the decisions that you feel you need to make as well. If that's a fair exchange, but that's one of the things we have. So when it's like, hey, I need to paint this, she already knows. She'll ask me, and I'm like, I don't make that decision. Like, if you wanted this, by all means, let's do it. If you want the couches green and velvet, let's do it. Because I got to travel for 2 weeks, okay? Let's do it, right? So those are the things where I've just been able to create that non-negotiable. And again, obviously, I do them because obviously there's love, wife, spouse, etc. But it's very easy for it to become one-sided, where it's, hey, I need to do this, let me do it. And then when the other spouse is needing something as well and needing you to approve, and sometimes people need to feel like they have that blessing to do things like, hey, I know I can do it, but it feels that much better knowing that you have my back on it. So that would be an example, one of the non-negotiables I have.
Love it, love it. Or anything else, Brandy?
I think she posed that question to all panelists.
Oh, okay. I would say for me it would be, you know, birthday. Birthdays are important. It's kind of a non-negotiable. I'll try not to travel. And for me and my mother, I'm the only surviving, sibling. So, my mother's birthday, no matter what, I gotta go. I gotta go and fly. And I've had employers, and hey, they've been good. No one has a problem with that. But even for me as a business person, birthdays are non-negotiable. Got to be there. Money.
Coming in, I'm here. So for me, holidays and birthdays, because my mom, her birthday is the day after Christmas. And so when she was diagnosed 10 years ago with lung cancer, I made a point of, and everybody at my job knows this, I made a point of saying I would never miss another birthday and I would never miss another Christmas holiday. And my kids feel the same way. So I have a daughter in Dubai. And so prior to that, she was in Arizona at school. And so we all made a pact that we would always be there because life is too short and you don't want to not feel sad because you didn't make the time and carve out the time from your day, your busy day, your work day, to make time for family. That's all I have.
Okay. All right. That's good. Anything else, Brandy?
Someone else asked a question. What funds do I absolutely need to start a business?
What? Say that again.
What funds do I absolutely need to start a business?
You know what? I think that one we want to take offline, meaning that because we need to listen to that person and what they're trying to do and get a little bit more information. So if you can reach out to that person and get their information, so we can reach out to them and really dig into that with them and help them, that would be great. Because there's, hey man, if you setting up a lemonade stand, it might be a little nothing, but there's so many different ways. We want to make sure we give you good information that you can use. Are there any others?
That wraps all the questions. Appreciate the 20 of you who have attended this webinar.
All right, that's what I'm talking about. All right, BGG. And for some of you guys who don't know, we will take these and these webinars are recorded and we'll post them up. So if you have friends and other people that you want to share them with, they can go on the site and go into our YouTube channel and you can watch them there. And you can watch some of the other videos. We got some amazing stuff in there. You see Monica in there getting busy and breaking off some knowledge. You see Andrew in there. You see Brother Corey in there. There's a lot of us in there. And then also you see some young entrepreneurs telling their story. And what we want to feature are young entrepreneurs and older ones too. And then we're going to have the master's class. So I talked to a couple this morning. We're going to get them on film. They own a number of massage envies and European waxes and other things. And they're like at the super level of entrepreneurs. And then they have hammer and nails, hair salons, and they're doing a lot. But you want to hear from those entrepreneurs too. We want to do entry level, mid level, and then we want to do the superpreneur. So anyway, we appreciate everybody joining in. Catch us on Wind Down Wednesday. Monday is Money and Merchant Monday. That's a chance where you get a chance to put in information about your business. Tomorrow is a chance, if you want to be the entrepreneur of the week or the business owner or business of the week, please put your information in. So we will be able to reward that. I think we didn't get anybody last week, so the person, Gail, is still riding high with her business and her photo in there. So let's see if somebody wants to knock Gail off the block, put their business up there. You gotta put your request in to be recognized. It's free information. Any specials you have, whatever else, put it in for Monday. We'll approve those posts. And then we did something new. We did Coffee Friday, and then we announced the book for next month. It's going to be the Millionaire Mind, I think it is. Or and then if you haven't read, you can also go and check out the Millionaire Next Door. But we are going to go the Millionaire Mind next month. Get it on audiobooks if you don't have time to buy it and read it. Very compelling. But we're going to be doing big things. A lot of stuff will start to unfold, some more things next week. But we thank you very much for staying, and talk to you soon.
Rob, you actually forgot Teach Me Tuesday.
Say again?
You forgot Teach Me Tuesday.
Oh, Teach Me Tuesday, yeah. Teach Me Tuesday.
To submit topics, questions that they would like the panelists to answer on the upcoming webinar.
Okay, perfect. Teach Me Tuesdays. All right, so you'll see there's always a reason to be connected. Okay, so we appreciate everybody. Thank you very much, and we will see you next time.
Bye-bye.
Bye, BGG.
BGG in the house.